Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and here it is, October the 3rd, 2025, Friday, NFP day. But as it would go, there is should be no non-farm payroll today, as the government is shut down in the states. So unpredictable what's going to really go on. I do have my downside watch for around 0.88 as a downside objective. We'll see if that continues to manifest. Otherwise, unpredictable day. Just stick with your regular algorithmic trading, I suppose. 8:30 has come and gone. Where non-farm payroll would have been, it would have been all over the place. But we don't seem to be getting much, so I think that's what is going on there. Let's put our 8:30 candle on here. That's a hard one to call there, Hadi. A suspension block. You go this one here, and there's a little guy right in there. See that? So do you take all of it as a suspension block? And if so, where's the entry? If you're only taking the first one, then I see your entry there. We've traded below this level. I was short here a bunch of times, so I was like short, and then it went back through it, so I got out. Then it came back. Now it's gone through it. Now it's gone through the other side, so I was waiting for a retest of the market structure, or the market structure shift here. So I guess that would be it right there for continuation on the downside. And I'm looking for that 0.87, but not clean enough for me, so got to follow the rules. So the regular, this fair value gap, if we can get into that. Right there. Oh, that was a little delay. Okay, so I'm looking for, where's my order block? Right there. I don't want to see it get back above this candle. So I don't want to see this get traded through. Otherwise, we're going to come back and retest this area here. So I want to be above that. If we get a retest of this area here, you don't want to close above, I guess, this whole area here. Mean threshold. Just going to watch this here. And you got to give yourself 50%, 62% of that range. Puts us right in here. So now we've traded above this level, so now I've got to change in direction, so I can't let that go any higher. I'm kind of stuck here now. So there's 50%. I got two different directions this can go. We've just come back, retested this. You want to see it go lower. If my objective is lower, I'm just going to leave this. Leave the stop loss where it is. I can argue both directions now. We've changed direction here. We've just come back and tap that. I want to see this eat through here now and keep coming lower. That's the retest of that level. There you go. That's what you want to see. That's a perfect retest and 50% of that range there. So I don't want to see it get past there again. So you want to take profit there. I've only got one on, so I'm going to move to a zero stress. We can, you got to stay above that because we can get a retest in here. So just going to wait a little bit more. Does that mean Darren also doesn't work today? No, I'm working. We're here doing our thing. So if you look at those, Hadi, you use all of that in here as a suspension block. 1, 2, 3 little imbalances. The whole thing would act like a suspension block, which is where that just came right back and tagged right there. That's how I see that anyway. What are your thoughts on that one? Michael never really gave us a definitive answer on that, but that's my guess anyway, for what it's worth. Morning, Russell. Oh, your intro is at 8:30. Okay. This is the kind of thing I like to see, it a retest and just keep coming lower. Morning, Rez. Yeah, it lines up with this fair value gap overlap, tap right into it. But it was worked too much inside there, above, below. So gotta wait for a market structure shift for me. But if you came in early right there at 8:30, because I think one of your trading rules is you start from 8:30, right? So that's a nice little right from the opening, Hadi. My rule is they start from 8:30, literally 8:30, grabs it, and he's off to the races. Good for you, buddy. Well done. Because it's Friday, I'm just going to aim for here. Oh, you're riding that horse, Hadi. You're doing very well, buddy. Very well. Now I'll just go to break even, zero stress, and for our level. That's correct, buddy. That's exactly what it is. Now, if you go to the, you want to see something crazy, you want to see where Mark was talking about before? Look at this. This is the 3 a.m. candle right here. Let me go to the hourly chart. Right here. That's the 3 a.m. candle. You trade below it. How come it doesn't show it on mine? Have I got the right one? 3 a.m.'s right there. Sorry. That's 3 a.m. Trades below it, comes back, taps it, and now we're heading for the next 3 a.m. candle, which is 30087. That would have been the perfect entry. We caught that this morning. So anyway, put it on your charts, mans and girls. 6 a.m. Pay yourself at 6 a.m. My buddy Abs is all over that. If you got a lot on there, pay yourself. Ali, good morning. Morning, Hans. See why you pay yourself at 6 a.m.? This is eating into your profits. But you have to say to yourself, where is the fail point? Where does it fail for me? And where does... So technically it's right there, just above that order block. So if we have this SIBI that gets, you connect to that this morning, and we get like an institutional order flow entry drill and keep coming lower. But that 6 a.m. candle, you should always get some sort of reaction off of that, right? So keep coming. Now what I want to see is this order block get validated. Now it becomes like a little bit of padding here. So Ollie, I don't know if Ollie's in here yet, but you remember when Mark or Kevin was talking about a foothold? I think what he means by a foothold, or at least how my understanding of it, is that once the trade starts moving in the direction he wants it to go, as soon as it breaks, like let's say it breaks this low here, that's the foothold. Now you put your stop loss into break even. You do not want to see it go back to a blue candle now. I want to see it stay. Sorry, I don't want to see it turn into a gold candle now. I want to see it stay blue, stay on the bus, right? So once it's got a foothold, then it shows you that it's ran past its next safe point that you should find security at. That security is the foothold, is what I think. I'd interpret what he's saying there. If Ollie's around. If he's not, then that's my interpretation of Kevin's foothold comment there last night. And it makes sense to me now. This is the 6 a.m. candle from the previous day. I don't know. Let's have a look. No, 6 a.m. candle for me is way up here. That's today's 6 a.m. candle. Is that right? Yeah, 3, 4, 5. Yeah, it's the 6 a.m. candle today. That's yesterday's 6 a.m. candle. Correct. Sticks. Good morning, Craig. So we've got some padding in here now. That candle's been validated from below. So I don't want to see this lose the mean threshold of this candle. I want to see the 1, 2, 3 as the support level. Let's keep pushing lower. Keep coming. Also, 50% retracement will put us right inside that SIBI. So you got to be above that. So unless I get a SIBI forming in here, I have to use this as the potential retracement back to 62%. And if it comes up to 70, it'll take me out there. That would be the market structure shift. And this hasn't all been filled yet. He's long in the crude today. The crude oil. No, not yet, Craig. 4 hours not. Oh, wait a second. Wait a second here. No, I don't see a long yet, Craig. You got to get above this area here. You've just come back up into here. Unless you're using, no, cam models even busted right on that candle there. So I'm neutral with oil. That has to hold. If this is just starting to turn now, that has to hold right there. So I've got a 1 minute reversal with you on the same page as you there, Craig. So you may have caught it right on the money, right on the turn. So now you've got to see this 5 minute break and then start taking these equal highs and start targeting here. If you can get through that level, then start targeting that London high. But yeah, you may have caught something right early. Tiger by the tail, so to speak. So for me, I'd have to see this because you're high enough inside this range that you're buying a premium to risk coming to this premium and then reversing on you and coming back down again. You'd have to, if you've bought it down here, it's a great discount. As soon as you get to here, either pay yourself or move yourself into a break-even trade and then see if it takes that 60, 80 on a close. It's a kind of precarious one because you got nothing else showing you that it's turned yet. We had this big run back up into here. We did not get this candle close above that level, so technically the hourly is still discount, and we've traded back through that. See how we're trading back through this close of the SIBI here, or the low of the SIBI. We're already at 79. So just be careful, man. Keep your stop loss tight. But, you know, do your thing. Do your thing. Do what you got to do. This is a nice little retracement back into breaker. Nice breaker. Run higher. Looking for this little fella up here. For gold. Oh, we're through that level. I've got to put my stop loss down here now. This could be just happen here and then going higher again. So watch how it acts here. I want to see it close Came back, got me. It's coming back, tapping this one. So we've got a body above here already. Tap. So we can run higher into this area here. We got some imbalances above us here. Does crude use London highs and lows too? If it's algorithmic, Craig, you got to think everything runs on that idea. Everything. You can't just form fit it to one specific market. If it's algorithmic, it's everywhere. Maybe that's too broad a statement, but it's what I believe anyway. So now we're back up into that little area we just talked about. The rule is, as soon as it breaks that, if it comes back, gives you an opportunity to get your trade off before running back to that premium box now. So you've gone from discount, if that's discount, it might be just under. You'd have to take it from the first swing there. Or inside. No, you'd have to take it from that one. There's optimum trade entry 70%. And we did, there's your discount box, just underneath the discount, right up to the premium. Look how close that discount was, hey? Boop. Boop. Yes, yesterday after hours rally was good. Thanks, Big Short on it. 7 a.m. I want to see this hold. We're back into the mean threshold of this candle now that we've traded above it. Now you want to see that push higher. Or there's a little tiny imbalance, a little busy right here. We'd have to trade below this level, come back, find support at this, and then push lower. Because that will take this one out as well. And will give me the trade on the other side of it that I'm looking for. It's a continuation. Watch, see how we've just traded below it? Tap it. Now you're looking for a shorter. To go short there. And we're through the mean threshold of this candle. So just watch this one when it ends here. Let's see what we get. I want to see it close below there. There, it's closed below. Good. Trade back up. I want to see it get below here now. This whole revisiting thing, don't like to see that. So we just came back into this, so we've traded above it, come back into the SIBI. So this is all supporting going higher. And this one here, now that we've gone above it and we've broken the mean threshold, we're looking for a retest of this. It's come back, it's retested it. Now this is where you want to see it take off. From a bullish perspective, from a bearish perspective, I've got to see it get below this level here to keep coming lower. So I can argue both directions, so I'm going to wait until we get confirmation on this level, for me anyway. We have a downside objective to reach for, so you're slightly more bearish than you are bullish. Retesting it again. We haven't swept a low, so watch this little imbalance right here. Now you've swept it. Watch that little imbalance right there. And we've closed below, we've actually opened below this level, but we have not swept this on a close yet. You want this little guy here to keep holding, this one to slowly start to give way, and then lose this candle here. It's Tibbs too as well, so look at that, still not trading below it yet. Follow your rule. My rule is this: I got to make sure it trades below that and below that. We're below this one, but we're not below that one. So I haven't got a market. I haven't got a little shift yet into this bearishness. This could still go bullish. So this is like acting like a bear trap for me. And all this like, come on, try me short. Then all of a sudden it tears away on you and you go, oh, the bear trap. The rule is when a body gets below it, not just this one, that one and that one, because there's only one premium inside this range. This is like discount inside a small little range like that, and we've extended it already. So let's see how we've traded back up into that level one more time. How many times are you going to trade into that, hey? So you're trying to get back up there and it's failing. That's nice to see. But don't overthink it. Just have a set of rules that you want to abide by. Oh, Derek has arrived. Good morning. Good morning, Sir Derek. Derek subbing in for Eric this morning, projecting the Hulkster in the trade world. Yeah, I see it, Hadid. But this wick, I don't like wicks like this. If you want to see something really strong weak, you want to see it come up, tag that, and leave. And then get on the other side of this one, come back, find support at that, and push lower. Just from a wick perspective, as soon as you see a wick pointing a direction it wants to head, that's how you start to go, why are we not getting some momentum here? Why are we not driving down? Not that I'm saying that we're not going bearish, because we got a downside objective. I'm still looking for that level down here. So I just want to see and wait for my confirmation first. I don't want to get tempted by something that could just turn around on me. Like, see, look, we're eating through that again. We still have not got a body here. This is why that rule is important. You see, if you can get tempted to keep going lower, you feel tempted, but that wick, I don't like seeing that wick. I want to see it like this kind of thing right there. See how it just comes back up and taps it and leaves? That's what you want to see. You don't want to see extra wicks. Tap this, leave. Why did you wick into that? You came back into that order block. Okay, so are you going to retest the order block? So I want to see some down here looking for confirmation that we want to go lower. I want to see that level give out. So until it does, and now it's choppy, too choppy for me to fumble around in. And see, now we're back up on top of that. We're below it. We're on top of it. Wait. Easy up on the old reins there. The horses are spinning. Can't make up its mind. There's a snake in the grass. It's spooking the horse. Yes, I agree. The 1 hour is still showing us a nice little healthy reversal here. So you see how we're coming back into that? right there. You want to see a tap. So 125. We come back to 125. That's a nice little tap. Now you want to see this accelerate. Let's go. So you've got higher time frame that says just tap me, but you can say it could run all the way up into here. Anywhere inside there, retesting this BISI is perfectly acceptable. Also overlaps this BISI and also overlaps the high of the SIBI. So there's way too many potentials for this to run this wick back up into 138, which happens to be the 830 open. Now this is an immediate rebalance, you see. If we get back up on top of that, this immediate rebalance acts like a fair value gap. And now we start to look for hunting for this candle's low, its mean threshold, it's, you know, all that kind of stuff we're looking for inside this candle. See how it's, you got to be careful here, man. That bear trap is just tempting you. Come on, take me, take me. And then quickly comes back and takes your stop. There's a rule there for a reason. And believe me, I've been caught on that so many freaking times, jumping in on that prematurely. And it just slaps you. And look at the temptation there. Oh, wick below it. Oh, it's definitely going to go lower. Wick, wick. And it's like, oh, okay, I couldn't get him to pull in. And then it went higher. Stick for your A+ setup, Hadi. You got the A+, buddy. You got it. That snake in the grass right there just spooked your horse. Just hop back on. Watch for this level to here now. New trading term from DCT. DCT. No short for me now. Just watching. Yep. So now we're coming back. We validated this candle here now. You can find support and look at that, those little imbalances right there. They overlap this. So mean threshold of that candle. Now you see support to go higher. So keep your, always look for your bear traps and look for any potential swing point. And that last down close candle is your bear trap, right? Same as any up close candle or combination of is your bull trap. So you've got a bear trap and a bull trap. This one really hung you down, and then this one, be careful of that because we still have, remember we mentioned this up here that hadn't been really validated. I guess it was here. It traded below it there, came back inside. Here, closed below it, came back inside it. Here, traded back inside it. So still waiting. Wait for a market structure shift. So now we're inside this larger range. Once we get back into the mean threshold of that candle, which is right there. It's this Thursday's first presentation for value gap. If that holds now, I want to see this whole structure here get broken to the downside. And once you do that, then you have to ask yourself this. You see, this is the constant battle you have to have with yourself. It's like, am I paying a premium? So if it trades below here, right? Am I paying a premium discount to hopefully get a deeper discount down here? Or do I want to pay for a premium level? Sorry, not premium discount. Yeah, this would be inside this range. Would be a premium discount and a discount. So you're paying for a premium discount to get for hopefully a lower one, right? So that is already below 50%. So you'd have to get in above 50 to run down lower. As soon as it takes that low, pay yourself. So for this to go south, we need to see it get through the bottom of this, which is now in the discount portion. Retest that, which will be just above into the premium level there, or reevaluating that little very important level that I want to see. Hit and then go lower. That way you're getting a premium and you're selling it at a discount. So using your internal range liquidity, take profit model 1. As soon as it hits 50, you move to break even. Take a portion off as soon as it hits that low, then scale out. And if you can get through this level, come back and retest it. Just do a continuation. It's got to be like the market does a rinse and repeat itself over and over again. Follow the rules to the rinse and repeat over and over again. Like as soon as it goes ones and zeros and it switches over, and you see it switch over, that's the point. It must break. If it doesn't, then we're still in this direction. Because if you throw your emotion in there, if it switches over from ones to zeros to your emotions and feelings and thoughts and instincts and stuff, then you're into that gambler's mentality, right? If you've studied it to the point where you understand that precise level has to hold for you, whether you're right or wrong is irrelevant. At that point, that is your conviction. And if it switches up and you're wrong, go back, screen capture it, make notes, journal it. That's what your whole purpose of journaling is for. To reevaluate where you made that decision, why you made that decision, and where it went wrong. Then say, okay, this is what I see why it went wrong there because of this and this and this. Remember that, change my rule. And then you develop a set of rules that are strong, they're decisive, and they take time. You can't rush this. It's like somebody asked me a little while ago or just recently about, how can I get more information real quick? Like how do I get this stuff really fast, right? It's like there's a parable, I guess that it's called, or something like that. This little student says to the master, this was a kung fu guy. He says, if I study, how long will it take me to become a master? Oh, it will take you 2 years of constant studying. And the guy says, well, what if I practiced every day? And he says, okay. And I just focused on that one thing every day. And he says, well, that will take you 3 years. 3 years? Well, what if I studied it every waking minute I could during the day? And then he said it would take 5 years. Because you're focusing on trying to get something too quickly and not focusing on the technique, focusing on the wisdom that you develop over time, getting into the trenches and studying every one of the candles, so to speak, and make mistakes, learn from them, screen capture them, write them all out. You can't fast track this stuff. You've got to study it. You got to be in the trenches over and over and over again. Take the hits, blow demo accounts. If you get into the trading portion of it, if you're just studying price action, stay on the horse. Refine it. See how we're above this level now here on a 5-minute chart? Now you're finding support off of here. Your 5-minute now becomes, I'm going bullish inside this range. So in other words, there's no way to do this quickly. The faster you want it, the more you'll miss it. You'll miss the principles behind what it is you're trying to learn. Okay, so now we've come up into the mean threshold of that candle. Wait for it to break below here. One hour has been closed in. Yes, it has. Yes, it has. Good one, Eric. Eric is looking for a short. And see how you're denied again? You've come back down into this level. We've found support, went higher. Come back, hit it. We're bouncing off of premium discount. Inside this small range here, the discount box is sitting here and the premium box is there. So you've gone from premium to discount, back up to premium. And now if we get back up on top of premium, we'll go higher still. This is where you get smashed around inside here, right? So many times you hear people, especially new people, say, what's the best ICT stuff I can study? As soon as I hear that stuff, I go, okay. So basically you want to fast track yourself. You want to be where everybody else is right now, right? You want to see what we're seeing. You want to, which is really great because I love the enthusiasm, right? But if you don't know what an order block is and you don't know what the three important levels of a candle are and where they get validated, won't they get validated from a basic, where does this candle get validated? Where does that candle get validated? And what three levels in that candle are the most crucial for you? And then get more detail, what 4 or 6 levels are most important to you. Then learning all the fancy setups and stuff, you'll miss the detail. You miss specific data points, which is what we're trying to perfect here, which is what staying on the horse is all about. Don't rush it, grasshopper. Study, take your time, eat the grass. We're above this level. Wick's just doing some damage. Well, welcome to a shutdown government. So I like that we are below the hourly now. That hourly level right there at 125. We came back in here, retested the hourly. It stops at 125. And now I want to see that roll over and start coming lower. How's your long gone? Oh, look at you. You got your long so far. It's holding. It's holding. So well done, Craig. If you caught this still long, you want to see this hold now. You can keep yourself into break even. Zero stress trade now. Look at that. You're above that level. See how you traded back, and you got to give this whole chunk right here, because they're all up close candles. Mean threshold, if we trade through the mean threshold, look for another run back into this level or this level. So that whole block, you'd have to put one tick below that low. You see where you're sitting right there? One tick below the low, you'd be squeezed, and it just squeezes all the back into here, and it touches, oh, it didn't quite touch that one, but squeezed all the way back into here, right into that discount portion of this whole range. And then you want to see it bust up above immediate rebalance. It's got to get back up above here. It does close right there, that low. Look at the low on that candle. It is 60.82. This candle closes at 60.82. So it's closed right on that same level. This one opens on the high, comes back in, taps the consequent encroachment, then runs higher. Now you want to see this hold price, or this cluster of, like this we saw here. You want to see this cluster and that BISI hold price. and keep pushing now. So if you're in long there, and now you've got some padding, or what Kevin would call a foothold. You've got a foothold on this, so now you don't ever want to let that come back down below you. So keep your stop loss in profit and let that sucker run. Well done, Craig. You got in right on a 1 minute turn. Now, if you could milk something out of that, look for that rejection block here, and look for 25, 50, 75% of this wick, and then look for that mean threshold at 61.44, which is your 6 a.m. candle. Well done, Craig. Crude long green stops in. Good for you. I remind myself that we are on the sell side of the curve. Market maker X model. We're inverting the 4 hour. Not yet. We're in the process of it. Nan, you got to see that close in the next 36 minutes below 127. And then what does that tell you? On a 4 hour chart, where does that tell you? If you close below 127 in the next 36 and a half minutes, we have the potential for the next candle to run back from 127 to 147, which is way up here. That's the potential roll up into that 4 hour candle and touch the top of that, which is sitting right there above these equal highs. And then go lower. Right? Which should be like a full fill of that hourly as well, because that's 144. So just be careful. It's we like to see short, and then where are you heading for? If we get below that there, that just tells you, man, I'd love to see a 4 hour drop below that swing point, and I'd like to see it get below 0.13, and then you're really looking for a nice big short all the way down to 785. Anyway, that's kind of wishful thinking right now. So until we see some confirmation on all that lot. So how would you trade that, Nan? So all you guys have got your experience now. Tell me how you would trade the 4 hour candle. What would you be looking for to go short there if that 4 hour candle closes below 126? See that? Just that little sucker's not giving way here. There's your next bear trap right there, lowest down close candle. It was this guy, and he wouldn't let you have it. This guy here won't let you, oops, won't let you have it either. This guy here won't let you have it. Sends it higher. These little bear traps keep catching you wanting to take this short, and you say, I want to see market start. This is way too tight. These little ranges are way too tight for me to try and get into prematurely. So I want to make sure that these levels hold or break to the downside. Then I start to get a little more, all right, now we're on the right side of it. Otherwise, you break to the upside, you come back into the mean threshold of that candle, which is right there, which is also that little imbalance right there. Look how the bodies respect that. That little bissy right there. What did this come back into? Little imbalances. Stretch that right out and you'll see them sitting right in there. Look at that. Body sits right on it. Well, and then we send her higher. There's your 830 again. Now we're above this one. This bull trap gave away. That whole bull trap here, this little bull trap ran through. You want to see it hold, it didn't, goes lower. And then you want to see that break, it doesn't. This one, you want to see it hold, it does, goes higher. Then you're looking for this guy right here. These two candles, see a body trade above it. Now you want to see that hold right there, which is also the top of this dude. And 1-2 points on our bearish down close candle here. So that becomes the little breaker that takes out that high and takes out that high. We've come back, retest, still send it higher, looking for premium box, which is anywhere from there to there. And that includes all of his suspension candles, which is what we would have put anyway. So the fact that he's calling it suspension, fair enough. That is still the same level we would have highlighted anyway. So that's the premium box from there to there. And now you want to see this and this giveaway on the downside. Otherwise, still going higher, and our 4-hour has not been validated yet because we have not closed below there, and we still got 31 more minutes. And our 5-minute, there's our 5-minute, traded above it, come back inside it. Look at that, perfect entry for a long, right? And where are we aiming for? Right here. So our 5-minute objective would be right here. If you're going box to box trading right now, if you're hunting for a box to box trade, look right there. So we want to see this close above this, come back, tap it, and then drive for that right there, or one big solid ripper up there. Either way, that's the candle I'm looking at right here to the left. I want to see support, price to go higher. If it doesn't, it rolls over again, then I'm back to looking at this level for a break, retest, and go lower. That's just basically my rules for range extension and internal range liquidity. Yeah, it's a good point there, Derek. Now I can try to find something I like in the indices. I need 5 years training on indices, 3 years down. You'll get it, Craig. It's hard for you to switch over. I would imagine it'd be hard for you to switch over from that retail mindset and with all that master stuff you got on financing and market analysis and all that stuff. You can't undo that in a hurry, right? And you found things in there that you support and that have worked for you. So here's 9:30 open. Look at that retest right there, right back into this level. How delish is that? Now we're still going higher, man. Look at that. Ooh, delish. Look at that, 50% right on the money. And off we go. Through the premium box, rejection block. And we're sending it higher. And there's our little box we're aiming for in a 5-minute. Ooh, look, she's turning up on us. Cleared out the highs. 147 we wanted, right? Look at that. 146.25. That's the top of the 4-hour. What's the low of that candle? Sorry, it's 146.25. It is right there. 146.25. Good. Now you're below this level. Tap it. Go, 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 go. Come, come, come. Down here now. Right there. See that? Trade below it. Come back into it. We hit that peak level right on the 4-hour. Or start driving it out. Too much wiki for me right now, but this is exciting. Don't you find this exciting? Get a life, man. And she's switching up on you right back through that level. Bingo, 5 minutes done. So box to box trade all in 1 minute. That would have got you 121 or 122. You would have got 32 handles out of that. Now, if it trades above this on a close, find support, look for this level to get taken, and then we're gunning for 189. Now it's acting like non-farm payroll, hey? He's going crazy. There's your premium box here in a 1 minute. Right on the money. It's big yellow bus, Hadi. Big yellow bus. Yeah, there was no close on the 4 hour, man. It just went whipped through it, and now we're still back up into the premium. And your 1 hour, we traded slightly below it, and now we're right back through the top of it again. So more uncertainty. Maybe it's going to come back to our 3 o'clock candle again, into the consequent encroachment of that. That'd be 183. So look for some support off of this level here. And now I want to see if that goes any higher. Mean threshold of that candle right there. Even a wick getting through there. Don't like that. Retest old this cluster here. 830. Ugh. That's not a nice smash around there. Just cleared out all this liquidity. It just hit that premium box way up here. Hit this one on with the bodies. This one with the wick. Breaker. If you want to see a continuation, I agree, Russell. You've got to see it close below 127. And it's still got 25 more minutes to go yet. So it can happen. It can happen. What's our oil up to? Oh, look at Craig going. Look at that right above there again. See, this is the stuff I don't like when it starts to get, you're looking at this whole range here, mean threshold. That's like your line in the sand. And there's also the top of this one. See how it came back and tapped it perfectly again? Then you want to see the immediate rebalance. Highs taken. Let's see if this holds right here. Right there, Craig. That's what you want to see. Stop loss would have to be below here now. It's worked the bottom. It's worked the middle. It's worked the top. Now this should be done. It's worked it all evenly. Now, I wouldn't want to see it get below the mean threshold of this candle here. I guess you could get into here. Yeah, you don't want to see it take the low right there. That's it. Ideally, you don't want to see it get below here. That's your market structure shift. Bitcoin. Bitcoin. Up there. That's where you're looking for Bitcoin to reach for. Provided we do not get below. Provided we do not get below right there. Let me take that back. Right there. Oh, my girl's going off at work. Stand by. Right. Where are we? What's going on over here? Gosh, that is some wiki crappy stuff. I hope you guys aren't trading that. That is not what you want on a Friday, because you're going to take some losses. It's going to turn on you. Ask yourself, have you married an idea that we wanted to get down to here? And we are denied that idea. So forget that idea. Stay on the horse, because as soon as it starts to break the structure and you go, I'm on the wrong side of this, you got to recognize you're on the wrong side of it. And this isn't, delete it off your screen if it's tempting you to keep making the same mistake, hoping that it's getting down here. Stay on the horse and watch how it's playing out. We'll take that off there for now, so you're not tempted by that just yet. Look at this thing. It's just destroying people right now. Those who want to go long on that, it's just come back and just rip through everybody's stop losses. Don't play in it, man. Where's an A+ setup in here? There's no A+ setup in here. Back into this one. Now watch it rip all the way back up here again, taking out these highs. Agreed, Kevin. Just wait for the dust to settle. There's a bomb going off right now, and it's just clearing people out. We'll put this one back in the we can get below here. Get all this. I would wait for everything to get cleared out. Wait for this whole structure to get taken. You want to see, I like Russell's idea. If we can get that closed below the 127 in the next 16 minutes. We want to see a structure break. This bull trap or bear trap here, we want to see this give way. I like the fact that we've closed below the close. Now, for me, a little bit more support would be right here. Tap off the bottom of that, that's fine. And roll over and start coming down. But because of this whole crazy whipsaw action, I'm not even remotely interested in this right now. But nice clean action would be just to come back to the mean threshold of that and then just leave. And it's already wicking through, making a mess of that candle. So it's not acting clean. Don't participate. Wait for the macro and wait for 10 o'clock. Yes, Russell, yes. It's one thing to think down or up, quite another to be able to take a reasonable setup inside that movement. This is one of those days they do this for first 1.5 hours, then market just settles and moves. Maybe we drive to 68.2 area and then flush it down. Yeah, it's so here's an interesting thing to kind of keep in mind this morning. If you start to see precise levels hold and then give way from there, or you see it starting to settle down and start to hit precise levels and then continue, you know the manipulation is kind of over with and it's starting to settle down. So I'm just kind of waiting now to see where these precise levels would hold, and not just almost there, but there, like right on that precise level, and leave. And what time you start to see that at, make a note, put it in your book when you got this NFP day, regardless of the fact that the government shut down, just the NFP day, if that manipulation is still in place as an automatic thing for NFP by the algorithm, or whether or not somebody's actually manipulating the market at that time. So that candle, we traded below it. You wanted to see here, here, and here. And we're already through that already. So the stop loss would be sitting right above there, above the high of that candle, or all of these candles that make a mitigation block. Oh no, that would be the breaker if we break that high there. This swing. You have to use all those candles. But I like the last one is the most important level. And you're right back to Friday's first fair value gap there. See that? Oh, we're through that already. This whipping around, man. Clear you out. Who is it, Dick? Mark? Was it Mark who said into the 6 a.m. candle? You're looking for it to get into that 6 a.m. candle? Look for the midnight open. On today, that's today's midnight open. So look for that. See if that provides support. It's probably the drawn liquidity right now as a data point. And then you got the first presentation fair value gap at midnight. Oops, I fiddled around with that. And then you got the consequent encroachment of the midnight open range, and then obviously the midnight open range. So you see, this is all, I guess, what Kevin would have put as a dead zone. It's like the danger zone. Wait for this whole zone to get cleaned out, because this kind of whipsaw action back and forth is wiping out accounts, man. And it's a Friday. It's a terrible way to go into a weekend with some losses, especially if you revenge trade this. You see, now it's going higher, and it rips back against you, and you know, damn it, now it's going lower, and it rips back against you again, and just keeps cleaning your account because you're revenge trading it instead of waiting for some clean setup to occur. And believe me, I've been there. I've revenge traded the shit out of something, and it literally beats you. It beats you bad. There's nothing up in here that's remotely supportive. So this last little up close candle, we wick through the top of it. It's still holding back price. A little bull trap, snap back all the way back down to this discount box, ran all the way through it to bull trap, like to like array, bull trap to bull trap. It's just crazy, all in one candle. Boom. Takes out the highs. Mean threshold of this candle. Now you want to see it get back above here and clean out that candle's high with a close if you want to keep going higher, and we're looking for the next objective up here. Will tear your heart apart. Yes, indeed. How's my buddy Craig doing there in oil? Oh, you would have got taken if that's where your stop loss was. It just cleaned you out there. But the bodies are respecting the mean threshold. How cruel is that? How cruel is that? That would have been a me out of there, Craig. If you're still in that. Balls to the wall. Congrats. There's 3 important arrays right there. Got to get above this still. Start pushing higher. Even oil's not fun to be in. It's a slippery sucker. Are you still in that, Craig? See, even this thing, this was that 930. Whip right through here, and then wicked again and took the low. Bodies are still respecting that level, but the wicks are doing the damage this morning like crazy. See how this one here, you say, I don't want to see it trade through the mean threshold of that candle. And then that would be the BISI. You don't want to see get taken, and just ripped right through it. Even with a wick, just ripped through. Premium, discount, all in one candle. Then goes from discount, ran all the way up into premium again, all in one candle. Even Bitcoin is choppy as hell. There, it hit the upside objective for gold. Did anybody trade gold? I only gave it to you down here. Or did I give it to you up here? Okay, you stopped green. Good. As long as you're green. Super green. Consequent encroachment is being respected. Bodies, or the bodies respecting the consequent encroachment. Wick all the way up into mean threshold of this wick. I'd like to see this get down through here now. Look for 50% of this. Perhaps, if that's holding, look for the lower time frame, 1 minute, 5 minutes, to see if there's a reversal anywhere inside here that supports a run back to 50% of that range. $902. 902. Sorry, it's supposed to be right there. $901.6. I want to see if it acts off of that, because that's from there to there in that little swing and swing. If this creates a swing, From there to there, that's 70%. And it's also 50% of that wick. So I want to see if that hits there. Just out of curiosity. Just from curiosity. Look at that all holding there. Look at those bodies respecting that level. I love it. I loves it. That premium giveaway there ran right through. Where are we looking for? Discount is way over here. Oh yeah, we got that right there. We want to see it get above here. Look at that, right on the money there. Looking for, oh, that nice little perfect retest there. It's got to get above this and this to go higher. So I am literally between those sticks. That's your next level right there. We've bounced off this premium right there. Back down to the consolidation. Cam model 1. Now you want to see this eat through that level. Take the highs. Then take this immediate rebalance. Clear that out. Get on top of that. And then take the last bull trap candle to reach for your mean threshold here. Looking lovely, guys. Carry on. Carry on, my wayward son. Oh, can you see that? Get up on top of here. Look at that. Box. Body trades above it. You come back inside it. Anywhere inside here. Level 1, level 2, level 3. You got level 1, level 2 at $8.66. $8.76. Box to box. $10. That's 20% return on your money plus 1% per month. Crazy. It happens, man. Look at this. Trades above it, comes back, gives you a perfect opportunity to get long right there. Back in May, $17, $20. That's 20% return on your money. Plus, it pays a dividend of 15, 12, 15% or something like that back then. So it pays also another 1% per month on top of the 20% you've already made. You're done. Crazy. Anyway, in May, wait till we get to May, you guys. March, April. We're going to catch some big ass long profit making stocks. We'll do a stock run. Stick around. We'll do some stock looks for, we'll get our heads together and see if we can come up with a really good stock picks this year or for next year. Look at Toronto Dominion saying, I ain't giving up yet. Discount box, not taken. We had a trade below here. Then we trade back up into it. Then you want to see it roll over. It starts to roll over and then says, I ain't got time for that. And then runs right through your premium array. Laurentian, on the other hand, is doing just that. Trades back into that level. And then we gap down and we're looking for this level to hold now. There's your market structure shift. You don't want to see it get below here, Gary. He's probably not watching. I ain't got time for that. Oh, looky there. There's the next deviation. Hit my carrot. The carrot has been hit right on the beezer. Okay, so we want to see market structure shift here. Get a body below the low. Body goes below the low. Then we come back and give it a little tap right there. Now you want to see a short from there. And we're targeting for 3. That was my phone. We're looking for 323. And then if we can get below this low, look for this to provide support to keep pushing down. Then I'm looking for all this delicious stuff. Then you can pull your fib from there, look for 50, 62%, so on and so forth. It's got to get below here though for continuation. Otherwise, internal range liquidity hunting right in here. 321. That's where my little that's the objective right there. How we doing now? Oh, look at it take off. Jeepers creepers. Where was I? Not watching, obviously. Oh, you see if this worked out. Look at that. Look at that. On the beezer. Well, it hit our level, Hadi. But what an ugly way to get there. That candle. Sheesh, look at that. Rip saw. So let's go back and break this move down here. Where do we see the move? Right there. I'm going to get rid of all that over there. And then I look for this little fella right here. Right there. Continuation on the downside. This one here did not quite give us the retest we're looking for. Unless there's a imbalance. Let me stretch this out and see if there is in there. There is not. No. Didn't see this one. This is the Thursday's fair value gap retest. Consequent encroachment. That one was pulled out a little further. That would have given us the Thursday retest. Not that, again, not that you would have taken it in there because it's just a mess in there, right? Till you see market structure shift. Here's your market structure shift, and then the retest of the market structure. And then wait for this whole thing to get taken out on the downside. It does, but doesn't give you an opportunity to get back in. If you use the lowest down close candle, ignore the wick, take the lowest down close candle. Body trades below it right here. Even that trade back up into that level. No, that didn't even hit it either. It is choppy. That's it. That's it, Russell. Time to go home. The 87 was it. Well, you know, you look at that from the hourly perspective, what an emotional roller coaster that was. So there's the 3 a.m. candle right here. There's the touch of the 3 a.m. candle. The acceleration, you come back up, squeeze, all that. You're thinking, oh, it's still coming down to my level. And then it rips back against you. So if you're trailing your stop loss and then it finally hit your objective, the frustration of that would have been huge. You just left that on there and said, I'm willing to leave my stop loss up there and let it run for the whole day. Like Michael doesn't chase his stop losses. He would have left it there. He probably would have endured this and then still hit the final objective. That would have been an ugly, if you were in the markets watching that. It's one of those ones where you're with Derek, you're out playing golf and you say, ooh, good thing we were on the 8th hole there before we saw that thing come back and then finally hit our objective. That would have taken us out. Okay, so where are we going now? He says, next downside objective is 053, 054. What is the low of that candle? 053.75, so 054. Yes, it was 323. But you'd have to be pretty confident in your 3 to 3 if you were you saw that big candle coming back here like that on an hourly basis, and all the 1 minute charts were trying to throw you off, saying, hey, look, I'm coming back. You think, oh no, would you have held that? I don't know if you held that. If you did, man, you got some cojones there for sure. You just learn to ignore all that and say, nope, I trust my objective, and that's it. I'm going to put my stop loss above the 3 hour, and I'm just going to aim for the next one. I don't care what happens in between. Like, that's some big balls there, Marcus. So on a 4 hour chart, we have finally had that close below the 127. Now you want to see it come back up and tag 125, 127, and then go lower. So 11 o'clock, 10 o'clock here. Retest this at 11 and then send it downrange. That would give you a 4 hour reversal. So anything inside here, that would be the target box to aim for as a retest. 053 was our next downside objective, 054, right? There's 053, 054, right there. Done. Next downside objective is completed. Now the next downside objective is 041. 041, 042. We've got to close below that, 042, which is right. This next 6 a.m. candle. Is that 6 a.m.? Look at that, right on the money. I'll get above here. Create this. Get above here. Watch area. Launch area. Silver bullet time, baby. Silver bullet time. I like your logic, Mark. I love your logic, buddy. Makes sense. Makes sense, man. And that, by the way, is a perfect fill of Marky Mark 3 a.m. candle. If you like this level of accuracy and enjoy what we're doing today, hit the like. I appreciate it. It helps the channel. And subscribe if you're new to our channel. Welcome. We're here every day studying price action, staying on the chart, staying on the horse, and just kind of recognizing key levels for support or resistance. Helping your trades, get yourself to that ThetaWaveTrader. Say, I'm not the ThetaWaveTrader. Getting to the ThetaWave, it's a mindset. It's a state of mind you get into trading like the algorithm. You're free of any emotion. You're just kind of ones and zeros, man. That's what you got to try and trade. Get to that ThetaWave state, which is that perfectly clear, calm mindset. Look for your setup. Take it. When you see it there, you take it. If it switches up, hits a specific point, you close out your trade and wait. And you don't sweat over losses or gains. You just get into that mindset of just relax and focus on a perfect setup and accept nothing but. Don't worry about all the stress, the talking on the sidelines. Just stay focused on your objective. Focus, focus. $993. Are we going to the 4-hour fair value gap yet below us? Oh, yes. Yes. At 25043. Oh, Derek, go even deeper than that. What do you see down further? Keep going lower. What do you see down below? I want to see that retest, that premium box, the new premium box that's forming here now at 125. I want to see this all the way into here. Well, that box right there would be nice to see it reach up into. That's kind of like the rejection box. Come lower. There's a little premium, This is called a suspension block, Michael's suspension block here. There's an imbalance here and an imbalance here, so that would be suspension block all inside our box here. You see that? Right there to there. So now we're above this level on a close. We're tapping it. Good. Now you want to see that go higher. That would be my ideal buy right there. Stop loss will go just below here. If I lose that mean threshold, I'm out. See, it's still wicky in here. I want to see that just tap cleanly off of that and go higher. So bull trap is right here. I'm just trying to catch this long off of here, and I'm in a premium portion of this. So here's the punishment. If that bull trap holds and that fair value gap gives way, or sorry, that mean threshold gives way, I'm on the wrong side of it. I'm already on the wrong side of it. Just, I don't even like that wick getting in there. So this, I'm trying to catch it as a 10 o'clock long, but the bull trap has to break. So not an A plus setup, just a nice little, that level I want to see provide support and go like that. See how it tapped right there? That's what I wanted to see this candle do, and then go higher. Now I want to see it break this candle's high and use it as support to go higher. So I'm trying to get in here, not in an A plus setup, but just off of a 10 o'clock, change in direction, come back inside. Now that we've traded above it, come back inside it to go higher. So now I can go to break even. The moment it takes that high out, I got to go to break even just because I don't want to see it. And the potential is for it to come back in there. So I really should stay below that. I'm going to stay below the half of this wick here. And hopefully we don't get this wicky crap going here. I want to see it leave and get above our level. So we still got to get a body above here. It's our bull trap. I want to see that one break to the upside. So you see that why it's not an A plus setup. It's more like a, I'm in a premium. I'm paying a premium to go. There you go. Now we're going. Now I can get into profit. Now I'm in a stress-free trade. So kind of a gamble. It is the reversal. It is the time and price that I want to see a reversal. Didn't want to see that wick get down there that bad, but at least we didn't close below that mean threshold. And now we've broken the highs. So you go to break even. There's my foothold, as Kevin would call it. And now I'm looking for that run higher. Does that make sense? So you can see that wasn't the greatest opportunity, but it was one of those, if I trade below that on a close, I'm on the wrong side of it. But if I count it, I'm catching a bomber if that takes off on me. And now I'm looking for this to come back. I don't want to see more than, I have to be below that. I have to be literally on my profit because I have to be below this candle, one tick below the end there, and that really puts me right in the open, right? So I want to see that hold price now that we've traded above it. Ideally, tap it and go. Consequent encroachment of the wick. Tap it, go, 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 go. Leave here now. The line in the sand is obviously the mean threshold of that candle, or this one's the higher one, so you'd have to use that. So far good, good. Keep going. So I'm looking at specific points to hold price. That high is also the consequent encroachment of this wick. I don't want to see this coming back down here again. That's not a good candle to see going on right now. It's got to start leaving. Look for the mean threshold here. And if it comes back and gets me, then there's the mean threshold. I'm out. It's through the mean threshold already. Still wicky. We're coming back to test this one more time. Look at that, all the way back inside here still. And that, if I would have put one tick below the low, it still would have got me. Now watch this level. That's it. That's the run up right now. We don't have a reversal going on here, so we have to wait for this little bear trap here and this level here to give way. Otherwise, still potentially more upside. So far, this wick, this mean threshold has been traded through once, twice. I'm looking for this one to give way now. See, if I would have just left my stop loss down here, all that profit gone, and now you're underwater. So you can see where the level is. You don't want to see a give way to 1, 2, 3 levels all in one candle. Your ass is next. There's your stop. through here as well. The SIBI literally closes and opens on it. Now we're looking for this to run through the mean threshold here and go lower. It's literally sitting right on there now. Too much. The wicks are still not precise enough yet. Yes, exactly, Kevin. That's how I look at interpreting your foothold comment last night. I will get rid of that watch here level. Look for 87.75 to 87.8 or 88.5. Still holding. Wick. Not clean. That's going to be the new phrase, Kevin. Have you got a foothold on the market? If it comes back against you, will you still be green? Where's your foothold? Also known as the failsafe. If the failsafe is broken, you know you're on the wrong side of it. Get your trade off there. There, we've traded below that level. We're tapping it now. Come lower. I'm not touching this, but I like to see that and come lower now. Just extended that little low. Always at the next low. Always at the next low. Wait for the midnight open to get tapped again and worked. Rejection, rejection. There's a rejection block. Midnight open, consequent encroachment of the first presentation fair value gap at midnight. Look at how that's being worked. It's an important level. Put that on your charts because that's an important little first presentation after midnight. So now we went lower, extended, and now you want to see if it gets back through that level right there on a close. Use it as support to start pushing higher. It didn't. It's still body respecting the consequent encroachment of that. Sorry, that's be right up in here, from there to there. And it's just chopping around, so this isn't something you want to play in, right? That's a choppy market. It's just trying to stay on the horse here, that's all. Here she comes. There's your midnight open. Still respecting that. Range. Extend. Now if we get through this level and then come back and find support at that level, that candle's high open. This candle's not valid yet for me. I want to see a body get above here. You get a wick there as well, but I want to see a body get above that to use this as support to go higher inside this candle. Then I battle between this one and this one. There, now that's valid. Now this candle's 1, 2, 3, 4 levels I'm looking for support, and I'm battling right in here. 1, 2. There's the first one. You've already taken that one, so look for mean threshold to mean threshold now. I have a goal or a dream. I have a dream right here is where that 4 hour, this candle turns into a bull candle and reaches back into that 4 hour level we're looking for. 125. Reach for the mean threshold, and there she be. There's 0.90. Now let's get back up on top of where we're looking for here. Lovely, lovely. Get up on top of here now. This is even better. 16 seconds. Okay, so let's come down and tap 89. There's 89. Ooh, there's a little tiny guy right here. You see him sitting there? Right there. Down in here. That's the bottom of it right there. Oh, with the imbalance, you can go down to here. 78 to 79. There's 78. Good. Now you want to see that leave from here. Or are we going to eat through that on the downside? Or through this one? We trade it back into it. So you've got a high taken, change of direction, come back up inside it. Way too choppy now. It's still not precise enough. They're bouncing around like crazy. Rewaz says it was SMT with ES data 10 a.m. high. It's not MO, it's lunchtime. Yesterday we it's not midnight open, it's lunchtime yesterday. We re-at that's midnight last night, was it not? Thursday. Right there. Yeah, it's midnight candle. That's the midnight from last night. So it is the midnight open. It might be your lunchtime, whatever country you're in, but it's midnight New York time. The 15 and 5-minute candle show me nothing. That's nonsense. No need to go down that far. Manual intervention foul. If it does that again, I'm going to have to go to the beach. Yes. Go to the beach now, Derek. It's this is chop. This is not, you don't even want to participate in this. Yeah, good. I'm gonna wait for the macro here at 8:50 my time, which is 10:50 here in there in New York. Wait for the macro. Don't chase it. You've got nothing in here yet that supports. So I'd want to see 103 get taken and then a body close above 112 and then consider something long from there into here. You got in long at the inversion fair value gap. Which one are you talking about, Derek? This is a fair value gap, fair value gap. This is all fair value gap here. Where's your inversion? This one here? If you got in there, pay yourself at rejection block. That's a nice little, still super choppy. It's a ballsy move, Derek. 78 to rejection block. That would have given you 20 handles. $10.08. 10.08. Yeah, this one here. Well, that would have been nice right there to catch the long for sure. For a silver bullet entry. Catch the long. And then all of a sudden it traded through it. So no longer silver bullet. So if you're touching it here again to run higher, rejection block. Did you just get in right there at what time did you get in at your 10.08? Did you access it here or did you access it right here? I have another take profit model 6. I think I'm going to come up with now. It's a crazy idea. Take profit model 6. I'll share it when I see you guys in Toronto. Tell me what you think. Remind me of take profit model 6 when we meet up. Write it down, Hadi, because I'll forget, man. Take profit model 6. when it came down and hit at 27. Ah, right here. Did you pay yourself at rejection block? It was 25.11. Oh, up here. And is your stop loss tight, or are you just leaving it at the bottom of that SIBI? You still may get it. Look at what the other guys are doing. Where's Kevin? Kevin likes to play in this campground here. Right into that breaker, mean threshold. Look at that. How perfect is that? And if you draw all the way across to this breaker, it's also the mean threshold of this one. Look at that. Just nice lines up perfectly on it. It's not some random wick digging in here. That's hitting the key level anyway. Here, body trades above it. You come back inside it, go long, wait for a body to break the high of that. It does. Mean threshold. You don't want to see that get taken. It does. It trades back into this little fella here. Very first candle to the left. It's whole body, one tick below the low. You would have been good there. The mean threshold would have threw me off there. Trade above this level. We come back into that level. Continuation to the upside. Range extension. Nicely traded. Back into this level. Nicely traded. Continuation to the upside. That's all nice, little, much cleaner on a 1 minute chart on ES. So Kevin, if you're running this one, that is like, if you're just following my basic rules of inversion, look for the next premium array, trade the premium array, look for an extension rules, then you would have just, you'd be nailing it in ES right now. Oil, still reaching through, this level still holding. Look at that. Drop below there. Above there, taps it nicely here. Now you're looking for here, half this wick and all of that. So wait for a body to get above the high. It does. Comes back, taps the wick. Extends the range 3 times. Change in direction right here. Trades back up inside it. Goes short. Trades below that level, comes back to that level, runs lower, range extension. Now I want to see this close below this candle. I use this candle for support to run back into this range here. I'm looking for this little level right here. That mean threshold, you don't want to see give way. If it does, if these 3 candles give way, then look for a retest of that down here. So we'll see if that level right there gets closed below, and then you're hunting for over here. Bitcoin. See it come back and tap this at 668. That's the upside sticks. See if we bounce off that stick. I'd like to see this hold, come back down into here first, and then run to that stick. But if it keeps running, look for that and see if we can get above it. Gold, gold, gold. Hit our upside objective, just nicely wicked up in there. Beautiful. The rejection of the right there off that consequent encroachment of the wick. Body's respecting the consequent encroachment. Love it. Big dig down all the way into the top of the breaker here that takes out this low into the breaker. Nice snap off of that. So now you're stuck between this breaker and this mean threshold here. Ultimately that. And so premium box, discount box. So if this rolls over here now, takes that low, looking for the discount box here. Let's see if we take market structure shift and then start getting back down into here. Meanwhile, back at the ranch, Eric is now hit his 11 level. So see how the body trades above this level and then comes back to that level? Look at that. Beautiful. And then continues going higher, looking for our 125. There's 125, 127. That's what we're looking for on our 4 hour. Ooh, baby. Exactly what we want. So there's the 127, 140, 127 to 146. There's also that first presentation fair value gap we talked about right here, right there on Thursday. Did we hit it? Just shy of it, 129. What's the high of that? 128.75, a quarter of a handle short of Thursday's first presentation. Now I want to see this level here and that candle get taken. Now notice it's not a swing, but I want to see this candle to the left of it get taken and then use it as support. I can get through that mean threshold as well and eat through this candle, use it as support to come lower. That's the retest of the 4 hour. Now you want to see it come lower. So we're looking for any chance to see a change in direction now that we've hit the 4 hour reversal. So we're looking for an opportunity to catch a short now. So that was the question I asked you guys earlier about what would happen if, remember when I was saying what would happen if we came back into that 4 hour level, if we traded below 127 and we traded back into it, what would we be looking for? What would, and nobody answered my question, but that's what we're looking for. Now that it's come back into that level, which we've been waiting for, I'm looking for the first opportunity now on a 1 minute, on a 5 minute, to confirm the next direction, the next rundown in the 4 hour window. So first one's here. And you got to get below this level right here at 0.88 on the 5 minute and use that as support. So I like this 10:30. So 11 o'clock would be a nice little push through here. Get on the other side of this, come back, find support at that, and then see a continuation. That would support this, which is what's happening right now. This on a 1 minute chart there. See that? Lovely. Now, if we can come back into here before we close below here, if we can come back into that level, I want to see a short. It's not a market structure shift. It's just the candle to the left of it. That's all. Keep coming. It's mean threshold. It has been validated, so it's mean threshold. Oh no, this is the candle. That candle gets validated from above, not below. Mean threshold. I like it. It's a breaker. We've traded through it. I want to see a body get below here though. There's the retest. Now we don't want to see it close above here. I don't even want to see a wick get above that spot. Right there, this is where you want to see clean price action now. I want to see it tap No more than that and go lower. Not even wicking past there. That would be precision for me. Nice. Good for you, Craig. You're welcome, Craig. Have a great day. Have a great weekend, man. That's what I want to see. I want to see it really start to tear down here now. This immediate rebalance. Oh, there's a little tiny guy in there. And we just hit it. Didn't see that right there. Just a little tiny fella. And you got to stretch it out. You'll see it there. See it right there. We just came back and tapped it. Now we're going higher. So I'm between this guy and this guy. I do not want to see it get above here. Big power push through here. Get through this guy and that guy. Come on, come on, come on, come on. Yes, there you go. Now run lower. That's beautiful. That's precision. That's what I'm looking for. Not even a wick getting through there. So now I don't want to see it coming back into that high again. Consequent encroachment's fine. Come back and retest the bottom of it's fine. I don't care. As long as we don't get a body or a wick above there. We're still going to get through here. I got a body sitting on it. I don't want to see this body just sit on that. I want to see it body trade through that level right there. No, I want to see the downside. I want to see a move now because we got the 4 hour has been retested. So you're looking for any opportunity now, Derek, to see a reversal. The 10 o'clock or the hourly is traded below its BISI and traded back into it. Now you want to see that run lower, and it's traded through the 4 hour BISI and traded back to it. Now you want to see it go lower. So you're looking at these lower time frames to confirm that the level we just saw get tagged on the 4 hour, which is right here. That's the 4 hour retest. I want to see this level get taken on the 5 minute and that level there supported on a 1 minute. And right now it's perfect right there. That candle's low or open to that candle's close is the level I want to see supported perfectly. Now I want to see it take that guy out on a close, not just a wick. I want to see that body close below here. So again, pay yourself if you're in here, first low or rejection block, pay yourself. It's still no body below there yet. See that? Now we're getting there. That's our turn right now on that 4 hour. See, that's what we're looking for. If you're ballsy and you're in there, now you're into break even and you're laughing. You've caught the perfect turn on a 4 hour chart. You look for the first opportunity to see the rule get supported for your trade, and the perfect opportunity is right there. Because if it trades through it and comes back, taps it, and it wants to go higher, then you're break even. But that's the perfect place for a short. And you can see right now, as soon as it takes that low, you move into Kevin's foothold, or my fail-safe is I don't want to see it get back above there. So I'm going to move into profit, pay for my trade, and let it buck. Let it go. Now, if you're really ballsy, you hold on to that 4 hour trade or a 4 hour chart, and you just let it run now. And just say, I don't care. Let it run for the rest of the day. And if it comes back, takes me out. I caught a nice little play. I got to watch it for a while. Ignore all the money you're making and about to give back. You just go, it's money I don't have till it's in my bank account. So They're just numbers until it becomes cash. Does that make sense? Like that is, we call that perfect right there. And look what you get right now. And you're zero stress. And we haven't been able to get back into this candle. We've had wicks get through there. So that bear trap finally gave up the ghost right there. Close below it. Now come back and give me one little test opportunity inside here. Your stop loss will go just above the high here, because that candle makes the BISI. So you have to include the BISI as well. So I like to see it come back to there. That's precision entry, my friends. Precision entry. Right there. And see where you are right now in terms of this range. You're way past 50% of it. So you want a discount or a premium to sell at a discount. And you've already run down to the discount. So your targets have already been hit. So if this is optimum trade entry reversal right now, and this runs back through this candle's mean threshold and starts to run through the high of that, then you go, I'm on the wrong side of this. Like here, for example, we've got these lows taken. If we trade through this, then this is our bull trap. So you can see how you can argue both directions. So right there, perfect. Now you want to see that come lower. Right there. You do not want to see it get through here. So keep coming. Lower. Mean threshold, line in the sand, and that close above there. Well, this whole section here. And then your breaker sitting right there. Keep coming. Now, if you're super ballsy, you would have gone one in there, come back, load another one on there, and just let it keep coming lower. Or you would have unloaded all the way down at 50%, 62%, 70, whatever. And then when it comes back to that level, load on again and let it run. If it closes above that, even that right there, that's it. You don't want to see it get through here. And it got you. See how that range has already been tackled already? Now watch this level where you just went blasting right through that. So if you're one tick above that high or here, you're sitting right above that. It just gave you a good squeeze. Didn't quite tag your stop loss. Now you have to evaluate. You've closed above here. You've swept some lows. If that comes back down into here, logic says get out of your trade until it trades back through here. So if your stop was there, squeeze more juice out of it and get out there and wait for it to close below here, because if that goes, that's bullish now. You got to be able to change. The horse is spinning and jumping. You got to be prepared to stay on that horse. Now look for it to take this candle's high, or sorry, this candle's close, open. If it gets up above that, then look for continuation for our box up here. Now what they're saying here is that we're digging deeper into that 4-hour candle. So if this is your 4-hour entry and you're just trading internal range of liquidity, you enter in, where was it we looked at entering in? Right in here. Oh, yeah, right there, perfect entry. Then you get 50%, move to break even, pay yourself half, take a portion off at 62. It doesn't come back to 50. It runs right down to 70. You move it to 60, hits 75, move to 70, and you're out. There's your optimum trade entry reversal. It trades back through our level here, comes back, it says you're on the wrong side of it, sending it higher. So you've got internal range liquidity hunt, and you got the change in direction. Again, you have to follow those rules if you're into that specific rule set. Now we've got a body traded above here, come back into it. I want to see that start running higher now. First candle to the left, this one, it's mean threshold. I don't want to see price get through that. So this guy would have to go right there. Sorry, right. Wherever is that mean threshold? Right there. I think that's it. Nope, a little higher. Nope, I was right. Right there. Somewhere around there. There you go. Keep going higher. That's good. This is all good. Support off this candle. I like it. Run higher. Rejection block. Pay yourself. So you got the trade on the reverse here into this range. You paid yourself on the way down. You see a change in direction. We talked about this. Ran above it. Opportunity to go long. Pay yourself at rejection block. Now it's back through that level. So I don't like seeing that. That whole candle, you're out. Pay yourself at rejection blocks. If that rips through here now, you'll go, ugh, I didn't pay myself at rejection blocks. Again, one of the other rules, whether you follow them or not, is entirely up to you. Isn't daily extremely bullish? Oh yeah, the daily is totally bullish. 4 hours bullish, but it's changing direction. So inside that 4 hour Derek, that 4 hour BISI that we've now traded below, it becomes a change in direction for me. So you can trade all the way back inside that 4 hour BISI. If you trade back through it on a close, then I resume back to the daily bullishness again. Otherwise, there's the first indication for a change in direction. Your hourly, same kind of thing. I don't want to see that get above 144. So 144 is the top of the hourly as well. It depends what time frame you're playing on. If you just stuck with the daily, you'd want to see at least 1035 retested and then go higher on the daily. So if that daily comes down to 1035, Derek, or 039, what's the high of this candle here? 03675. If it touches that, you look for a 4 hour, 1 hour, 15-minute reversal for that daily to continue going higher. So if you see a 15-minute reversal there, that's like our 1 minute for a daily. You look for a 15-minute chart to catch a change in direction, find support at that, and now you stick with your daily. You're back to your daily objective of reaching for the high. Does that make sense? You've got to take your higher time frame, whatever higher time frame you're working on or working from, whatever rules you're using at these 1 minute charts, you have to use that on your higher time frame. And if your higher time frame objectives have been hit, like as an example of this 4 hour, see how this 4 hour right here has been hit? So we say the first time it comes back into here, I'm looking for any chance to see a reversal. That was our first reversal right here, right? Change in direction. I'm going to buy that short. You take it short and you start paying yourself at the low, because that's the rule. And the 50, 62% take profit model 1, you would have taken that all the way down to 70%. Inside here, you would have traded that. Now, let's say you're on the wrong side. It's coming back once again. Okay, you'll see it right there. It trades through and it's heading higher. You catch that. So you've paid yourself on the way down. You see a reversal that says, I'm not done going back into here yet. So it broke through. There's your foothold has been broken. And now we've got a new foothold to go higher. Rejection block, pay yourself. And now I want to see this level get traded through and held. It did, held, and then all of a sudden it broke to the downside. So now you've got to wait for market structure shift. As soon as you see it go once and it breaks through on the downside, and it's twice it's broken, don't keep trying to jump back and forth on it. Wait for market structure shift before you consider doing anything else. And if it breaks market structure and reaches for the next objective, which is right here at 136, then you look for a reversal again to get in sync with that being the turning point. And if that keeps going higher, then we look for the next turning point. Does that make sense? Yes, I agree. I'd like to see that get hit first as well. That would be nice to see that retap that and go higher. Now, look at this 4-hour chart and tell me what else would you like to see on the next candle? If this candle just stays here and becomes a small candle now, what would you want to see happen on the next 4-hour candle? And with that in mind, how does that change your perspective of these lower time frames? What would you look for if this candle stays here and becomes really small? So you've hit this objective here and you go, okay, I like that objective there, but this could be the change in direction. We've broken through here. We've traded back in the consequent encroachment. Watch this level get taken. On the downside, if we get a close below that, I'm looking for this immediate rebalance right here to get closed below and then market structure shift. Anybody going to give me an answer on that one? What are you going to do if this candle stays right here for the next 2 hours and 58 minutes, bounces around inside here during lunch hour? And then at 1400 hours, something happens. What would you look for? Anyone? I think I would consider it an inversion fair value gap and potentially be looking for lower prices. Yeah. I'd look at this as an inversion, but what we want to see, if this kind of waffles around in here for lunch hour and then comes back, what would you want to see? On a 4-hour chart, I'd like to see an institutional order flow entry drill. Well, where would that give us? Right around that consequent encroachment, right? So you see an institutional order flow entry drill right around lunch hour or whatever. That puts us right back up into this box again, right? And then I want to see a reversal. So time, price, institutional order flow entry drill, higher time frame. I'm looking for confluences that support that narrative. Does that make sense? So that's what I'm kind of looking for a 4-hour chart. I'm looking for it to just waffle around in here for the next hour or two. And then after lunch, 1400 hours, I'm looking for a Tibbs 14 right here inside a consequent encroachment. And then I'm looking for lower time frames to support that. So here, this run up into here would be a full run up into this. SIBI gets filled. And that SIBI gets filled. What is that? Does that hit this objective? Yes, it does. Right on the money. You see that? So that fills, then rolls over, and then takes the downside, comes back in, finds support at that, and then we see this side get taken. Then my discount has been hit, 0.88. Can trade back into it, which was this here, trades back into it, and then goes blammo. So now I've got price, time, confluence, confirmation, continuation. So that's what I'm looking at as a narrative. Whether or not that happens, if it just takes off here right now, that's fine. Then I'm looking for market structure shift. I want to get below all this shit here first. This is too much. So I want to see market structure shift and then accelerate like crazy through here. Like it's really going to tear through that. And you see how this here lines up with the bottom of that. So if I break this on the downside on a close, it is also breaking this. So I want to see that come back, find support, which is finding support in here. and really accelerate through the rest of this. So I'm looking at multiple different ways to confirm institutional order flow entry drill or this continuation. Like that is it right there. It's done its thing. Now it wants to keep going. So I'm supporting two different ideas here. One for continuation, two for institutional order flow entry drill via time and price. Does that make sense? Now we're 11 o'clock. It's magic boxing right here. Now you will let it go to my target, please. What's your target, Derek? You were at 111 earlier. Are you still in this? You kept me for the beach long enough. 25, 129. Oh, you're looking for this high here. Okay. All our people are peeling off now, man. 108. Oh, gotcha. Well, looks like we've got people all peeling off here. They're done. Nobody wants to play anymore. Yeah. Yeah, it's crazy, Derek. That's why you got to pay yourself at them rejection blocks, buddy. It's quick. Get your money, get out. Get your money, get out. This is not running in any clear, smooth, easy run. So just take your rejection block and move to the side and wait for another setup. Just keep nibbling your money out. Otherwise, this could be just seek and destroy inside this consolidation here, right? So if you're at 108, you're already underwater again. So if you came down to 108, tagged it, rejection block. Tagged it, rejection block. And now we're going through the other side of it. We're at the rejection block on the other side now. Abs a 6 a.m. candle. Look at that. Abs. Where's my buddy Abs today? He's not in? Not with us? But I'm a man of principle. You should be at the beach right now, too. Come on, Derek. Let's get you up there, buddy. I think you'll get this. If you're just willing to. Where's your stop loss, by the way? Are you sitting down here? Is your stop loss height? Is it pretty loose here? I would imagine is your stop sitting down here? 108. 108 puts you right there. That's a discount. You'd be making like 50-50, like 1R. Yeah, you're sitting right there. This is good. You got some padding here. That's good support. Keep coming. You've swept the low. I like this. It's a suspension block here, as Michael would call it. Running higher. Watch it clear out that side. Get up on top of this. And then look for this breaker to get taken to the upside, because that's a nice candle. Yes, yes. Keep coming. Now you've got even more padding, Derek. Ooh, come on, baby. Let's get Derek to the beach. Derek's got his thong ready to go. He's hanging on the doorknob. He's getting ready. He's getting ready to get dressed and head to the beach. Right there. Good. Close above there. Close above it. This is all good, Derek. This is good, buddy. Come on. Don't just be a run on liquidity. Don't be just a run on liquidity. You do not want to see it get back through here. Mean threshold. I want to see a body get up here. Get up there. Find some support on an old one. This guy right here. Let's go. Come on, Derek. Let's go, buddy. You're so close. 126. There you go. You're above it now. Nice. You can come back, give a little tap right here, right there. Good. Now go higher. Come on, run them out. Run them out. Come on, I just want to see Derek get his thing when we can all his little banana hammock and head off to the beach. Yay! There you go, Derek, Eric, Derek, and Eric. Yay! Good for you, buddy. Well done. Raise the roof. Woohoo! There, now you can go get yourself a sarsaparilla and head down to the beach, poke a hole in a newspaper, sit there and enjoy the rest of your day, man. That was fun. Yeah, like pulling teeth. Looking for that 3.6 or Hadid's 830. Well, that's what I would be doing, Derek. My wife would be, where are you going with them scissors? Oh, nothing. Don't worry about it. Just going down to the beach. Being fun here in Spain next week, back to good old USA. Well, enjoy the rest of your trip, man. We're going for the summit in just under 2 weeks now, our little Toronto summit. And then I get to go enjoy myself on a beach in Thailand. Ooh, it's going to be fun. All right, so here's our magic box we're heading into now. Looking for this level. Looking for a change in direction here. And time and price, right? So if this continues here, looking for a reversal, or if it stops in the next 2 hours and 42 minutes and gives us an institution, we're still looking for institutional order flow entry all the time this is not being filled. You're looking for a stop, poke, and go lower. You went back to town? Oh yeah, I'm heading back there at the end of the month. This is a trader's dream, though. If you are retired, you can wake up, trade London, an afternoon US trade, then eat dinner, go back to bed, wake up, do it all over again. I tell you, you're in one of the best places to do the best trading and a lion's share of London and New York. Retiring over in Europe would be awesome. Get yourself a little winter getaway over there, trade the winter markets over there. Summer back in the USA. And then let us know where you are so we can all come hang out with your place. Yeah, it would be torture for sure if you're at a regular job. But if you're a professional trader, man, that would be the place to do it. There and in Greece. I think Greece worked out to be the best time for wake up, have a coffee, chill, read the newspaper. It's in Greek, so you're not going to read it for long. You're just going to be looking at pictures, and then go to the markets, do the London Open, catch that 3 o'clock candle, trade off the 3 o'clock candle, and then go for a little beach run. Lunchtime, come back. You start to see London's lunch, the retest of the London low or the Asia low, and then the continuation. I tell you, and then you go wait until dinner time. Then you can start trading New York. You've had a nice day to yourself while you let that trade. And then wait for New York to set itself up for the next part of your day. It's a beautiful way to run, man. And Africa, yeah, all the way down to Africa. If you've got the time and the place in Africa to do it, it'd be perfect as well. Yeah, you could do like what's that Greek island? Crete. Crete's low enough that you get like 20-degree weather, 20 degrees Celsius weather most of the year, and then it gets hotter in the summertime. But that's a nice, it's low enough that you can enjoy pretty consistent weather. You get some wind in August and stuff, and November, but I tell you, a good time to do it. Greece and Spain, Italy, not so much. Too many mafia there. Yeah, you could set up some classes, Derek. Do some trading classes, help some people out. That'd be great. $35, and come on, 35.75, 36. Woo! There you go. It ripped into it. That's the 4-hour consequent encroachment right there. Done and done. Now you're looking for a change in direction, or if it comes all the way back up here and fills, you want to see a fill and a reversal. So just because it hit that and kept going doesn't mean to say, oh, it didn't work. You just wait for your next objective, which is that to fill. And then if that fills and goes through, then we're looking for a complete rebalance of this whole down close candle all the way back up to 155. So inside now, this is that level we want to see traded through, traded back into. See, it didn't get traded back into. Now it's getting traded back into. So this whole level right here, all the way up to there, which is also almost a complete fill of the 4-hour. See that? That's why we have this as our magic box. Looking for another opportunity inside here. And if it just keeps trading all the way through that, takes out the 830 from Thursday, then where's that today's 830? That takes out today's 830 and keeps going higher, then we'll start looking for the consequent encroachment of this wick, the open, the mean threshold, and then look for new highs on the 4-hour. All of those looking for, again, change in direction if you don't get it. If you're in this long off of the high, the retest right here, and you're in that long, you stay in that long now until you see the reversal at the higher time frame objectives. It seems simple, but trying to overcome fear, doubt, and all that other stuff, and just look at data points, that's where the challenge lies. Cyprus, yes. Though I love their new prime minister in Italy, she's a fireball. Oh, yes, she is. So here is where I would look at the 4-hour fair value gap as the determiner. If it goes above, closes up there, then the probability of lower moves diminishes. I agree. If it doesn't close above that, I totally agree with you, Derek or Eric. And then lower becomes a potential for the afternoon. I see all these moves lower as pretend. I'm pretending to be serious and going lower. Not really. Yes. So if you're long here, this candle is support. This is also the break in market structure. So your long off of here is now break even plus the cost of the trade, because you don't want to see this get traded through, find support, and then run through the mean threshold of this candle. So foothold, you've got a foothold on the market long right now. So now you protect your money and you wait for any change in direction here at key levels that we would hope to see or may expect to see reversals. So that's the consequent encroachment of this SIBI here. So all the time you're protected with your trade plus the cost of it, then it's a zero stress trade. And now you're just watching key levels to see if they pan out or if it changes direction on you. Then you can get back in sync for running for a discount array. Look at that. You'd still be in that. Came back and give you a good squeeze. Now I'd sit right there. Just because I don't want to see that come back down there again. That big stab through there, to me, is just pointing a direction. It's telling you, guess where I want to go next. Come back up in here and then slam it back through this. $147. This fair value gap here on Friday. Today's first presentation fair value gap. Little tiny sliver. That's 147. It's also the top of this 4-hour BISI. And then I want to see this pointing the direction it wants to go. Wait for it to close below here and then take out this structure on the downside. Thank you, Darren. Have a great day. See you all on Monday. See you later, Hadi. You know he's not really gone, right? He says he's gone, but he's not really gone. Bottom of the hour, Crazy Ivan. Crazy Ivan, look back, come back into here, doesn't see you, keeps coming. Crazy Ivan. This has been a nice little retest in there. Right there, that's a nice little tap. I'm going to go short right there. Stop loss will go up here. And this is one of those no market structure break yet. I'm buying a discount and selling it at a deep, hopefully at a better discount, a deeper discount. I want to say this is the premium. I want to sell at a discount, but I haven't got a market structure shift yet. So I've got to get that. So it's like I'm coming into this trade early and I'm inside this range here and I'm in a real discount of this range. So if this runs all the way back up to a premium portion of the range, which is the ideal entry right here, right there, that's the short perfect entry. So now I don't like that wick getting up in there. That's not a good sign. Mean threshold, not a good sign. So now I'm going to go right there. Don't want that mean threshold to get hit again. It's got to come lower now. If it starts to run back up there again, I'm out. So now I want to see this really start to get down. It's just coming back into here. It's dodgy not to know if it goes over that mean threshold here now. I'm out. If it gets above there. I don't want to see that mean threshold give way. See how I'm looking for specific data points to hold, because this is potentially on the wrong side of it. We've traded all the way back up inside here. I want to see this being held now. I want to see that keep coming lower, not running back through there. I want to see it get here. This is the problem when we don't have market structure shift. We've got this run back up inside here, and now you're stuck inside here, so you could be bouncing around inside that. So you gotta gotta explode down there. I don't like the way it's looking, so I'm out. At least I'm break even, and I'll wait for market structure shift now. So I wanted to see it just come back in here, tap this, and just rip down. It didn't. That hole pushed back through that wick, through that level. Don't like seeing that. Then half the wick. It gave you the opportunity to get your trade off here, then move to the sidelines and wait for something clean, like wait for it to get down here. So I was jumping the gun, wanting to get in on that consequent encroachment and see this, trade into it and go low. Too much wicks for me. I knew it. I knew it, Adi. I know you're not. I knew you're not gone. Come on, let's get down below this candle. Well, below this one. Retap that. Keep coming. Clean would be like leave from here. Just come down. Just keep coming. Come down here. Don't even bother going back any higher than that. Oh well. What about a retest of this low level right here? That's the bottom of this. Now that it's been retested, test it one more time at the bottom, which is also back inside this BISI. What do you think, Adi? I know you're still there. Now wait for your rule. The rule is this bear trap can still hold price and send it higher. So wait for the bear trap to give way. Then you can start targeting this down here. Oh, okay. He's not really gone. He's just not talking. The D's still here. He's just not gone. Okay, so you see how that bear trap's holding? We want to see it go lower, and look, it's just coming back into that level again. So we can still go higher. The bear trap's still holding. So wait for that structure to break. It's the rule. It's the rule. Follow the rule, man. And if it's not your rule, make it your rule, because it's a pretty solid one. See you guys next week. When I'll be back, I'll speak English. Just say, ¿Dónde está la playa? ¿Dónde está la playa? Unless you know where it is. And your wife's probably going, ¿Dónde está la tienda? ¿Dónde está la tienda? She's looking for the shops and you're looking for the beach. Yeah, that's where you can get caught. I was bearish with you, D, but this has to break through here, and you got to think about the range you're in here. And if you're in a discount portion and you did not grab a nice premium to go discount, it's not worth the hassle. If you can't grab from here and offload at least the rejection block, which would have been here, then it wasn't worth trading that one. I was in here way too low. So luckily I got to get out of it, but would have been better to risk it up here to run down here. But it's a scale in, right? It's 1, 2, 3 different levels to scale in at. So the last best one, your 830 open. Look at that 830 being hit again. Now I want to see if we get below here. And just because you see these quick down close candles doesn't mean it's going to make a run down here. Wait for a body to get below there. See how the wicks, there's a wick taking it out. If that rips all the way back through there now, you go, oh, damn it, I thought I was going to go short. Look for a retest in here. No body below there yet. A safe trip home, Derek. I think it's going to be it for me too. Just want to see if we get it below here and then attack this level down here. I'd be looking for this level here. Not clean at all, you guys. We're getting into lunch hour now, so. Yeah, gonna be it for me. That's the end of the clock. The 8:30 to 11:30. Oh, stand by. 10, 8, 7, 4, 3, 2, 1. Yes, it's finally traded below it. And I'll come back up there. I was going to say, no, I'm going to run for my objective first. Bastard. So all of the bodies are respecting that level. Wicks did the damage. Finally ran the low. the discount portion. So it still would have panned out, but again, didn't like the data points, but that's okay. Still panned out. Still panned out. Now you got to wait for another market structure shift because this objective's already been hit. So I want to see 6 a.m.'s consequent encroachment get closed below. If we come all the way back up here and retest this, you've already got the discount portion done already. So if this just keeps rolling over here now and keep coming lower, you go, oh, there's that 4 hour looking for the reversal. Commit to it. You're in it. And in the magic box, if you commit to it, put your stop loss there and just let it run. Endure all this. Forget all that noisy stuff inside here. Just commit to it. You'd be in a nice trade there. The problem with minute by minute analysis and perfect data points is they can throw you off of higher time frame trades. You just said, look, no, I just want to put that right above my high there. The moment I see an opportunity, I put my stop loss up there and I leave it. And I'm going to risk that loss and I'm just going to let it go now because I want to see that hold and then start getting back down into that discount run. So that's how you got to kind of set it up inside your head and forget all this noise. Just say, I don't care. I'm just going to put that stop loss there and let it run. It fails for me if I start closing above that level. A couple of wicks, I don't care. I want to see a body stay below that level, and it does. You're in it. Now you can move your stop loss to break even and leave it alone. Now you got a zero stress trade off of a 4 o'clock or 4 hour reversal. If you want to wait for this structure break here on the 5 minute, and the 15 minute will be below this level right here. This first presentation today, use that as support and come lower. So wait for structure shift. And this immediate rebalance here, 126, you can still come up into this order block. And then you're looking for a box to box here on the 5 minute chart. And you want to see 0.89 give way on the downside for a 5 minute continuation. Look for 126 on the upside. That's box to box right now for here, box to box. That's done, dusted. Now you can go all the way back up into here. And this one, I'm going to change from here. Yeah, Apparently your air traffic control people are, there's no training for air traffic controllers. So keep your eyes open. Help the pilots out. Keep your eyes on the skies. Have a safe trip, buddy. It's a nasty class. This is the nasty class day. See that right there? Straight above it. Right back to it. Let's see if this holds price here at half this wick. And then starts to push higher inside here. There you go. There's the 126 we said. There's the retest of this. Immediate rebalance. Now I want to see it kick off of there. You can come up to 130, which will also put you in the premium portion of this whole range. If 126 holds right there, then I want to see it head down into 94. And it's holding. This immediate rebalance acts like a fair value gap. So you want to see it close below 115. And then get below the structure break here. And that 94 is the next objective for me. 94.88 on 101. We get back through the mean threshold of this candle again on the close. Look for this here. I think that's going to be it for me, you guys. Yeah, I'm out of here too. You guys have a great weekend. Be kind to each other. It's a good weekend. Be nice to each other out there. Violence is not the solution, my friends. Be happy, be kind, help each other out. And I don't know how our buddy is doing there, Peter, but if anybody is still interested in helping Peter out, drop a couple of bucks, even if it's helping him pay for a physio treatment. Nobody has to give him the big $1 million breakthrough unless you got the kind of money. But if you can help out Peter, I'll put the link to his PayPal, or not PayPal, his GoFundMe account. If you can help him out, great. And you don't even have to put your name on there. You can put an anonymous donation in there just to help him out. And let's see if we can get that guy back to healthy again. Anyway, you guys take care and have an awesome weekend. Love you guys. Appreciate your time.